understanding Forex Candlestick Patterns or Forex Candlesticks. So this video is going to help you understand the different candlesticks that you'll find in your journey through Forex if you're a beginner. Then also, as you advance, you know how to understand how to analyze the market more. So guys, if you understand how candlestick patterns are formed, you'll be able to adjust your technical analysis and be able to predict the future price movement. But first, let's look at the history of Japanese candlesticks. So the concept of candlestick charting was developed by Homer, who was a Japanese rice trader, and he discovered this concept, or he came up with this concept during his trading routes or routine. He discovered that the rice market was influenced by emotional traders, while still acknowledging the effect of demand and supply on the price of rice. So sometimes the price of rice would go up and there would be a high demand, or sometimes the price of rice would go down and there would be a low demand. You get? But later it was introduced to the Forex world by Stephen Nelson in his book Japanese Candlestick Charting Techniques in 1999. That's when this book was published. You get? So let's continue. So what's a candlestick chart? So if you had the previous video, I'll describe different types of charts. That's a bar chart, line chart, and one of them was a candlestick chart. A candlestick chart is a type of price chart used in technical analysis that displays the highs, low, open, closing prices of a security of a specific period of time. So you guys have tangled around TradingView or MT4, MT5, and you've seen that there are different time frames. There's a daily, weekly, 5-minute time frame, or the 1 hour time frame. Now each time frame, every candle on that time frame will run for either 4 hour, that's if you're on the 4 hour time frame, or the daily will run for 24 hours, that's if you're on the daily time frame. So the candlestick chart is made of candlesticks. That's why you see these things called candles, green, reds. Those some people tend to play around with the colors. So let's look at how these candlesticks are formed. So we have two types of candlesticks. There are only two. Though they are broken, they have different appearances that we shall look at in the next minutes to come. So I have a bullish candle and a bearish candle. So a bullish candle, let me get that drawing too. A bullish candle is one that closes above its opening price. For example, if it opens from here, it will close from slightly higher. It will close from a higher point. So if, for example, if this price is 9,250, sorry about that, hope you understand. It will close from a higher price, that is 1.9300. That's where it will close from. So at one point it was this low. It opened and maybe dropped to this point, but later pushed and closed above the opening price. And so at some point it was this high, but pushed down and closed from here. So these are called wicks. These are called wicks or shadows. So that's a bullish candle. Then we have a bearish candle. That's red. That pushes the market downwards. So same concept, but this one will open higher and close lower. Open at a higher price and close at a lower price than it's open. So this is its wick, this is its low. At some point it was this high and turned into a bullish candle, but it was pushed and closed here. That was a bearish candle. So let's see how candlesticks are formed. So let's look at candlestick patterns. So a candlestick pattern is a movement in price shown graphically on a candlestick chart that some believe can predict a particular price movement. That's a candlestick pattern. and it's divided into, or we read them according to their complexity or the type. You get complexity or the type. So complexity, what do we have under complexity? We have the simple pattern and the complex pattern. Then, sorry about it, I didn't write them in, but under the type we have reversal candlestick types, we have continuation candlestick types, then we have neutral candlestick types, which we're going to look at in the next slide. So let's look at candlestick patterns by complexity. So what does it mean? This depends on how many candles it will take to form a pattern. How many candles will it take to form a pattern? That's complexity. And under complexity, we have two types. We have simple patterns and we have complex patterns. I hope you understand this. We have simple patterns and we have complex patterns. So, what are simple patterns? These ones are patterns that take only one candle to form a candlestick pattern, and hence that one candle is used to predict future price movement. But hence, guys, never trade candlesticks in isolation. Don't trade one candle and say, since I've seen one bullish candle, let me get that draw. Since I've seen one bullish candle too big, I expect the market to continue upwards. Never. That's what they call isolation. Never do that. You have to add something called confidence, which we shall learn in the next videos. So simple patterns, only one candlestick to form that pattern. So let's look at the next, that is complex patterns. These ones take two or more candlesticks to form a pattern that are used to predict future price movements, two or more. So let's look at candlesticks by type. We have reversal patterns, continuation patterns, and neutral patterns. So reversal patterns are divided into bullish reversal patterns and bearish reversal patterns. Then also continuation patterns are divided into bullish continuation or bearish continuation. Then neutral patterns are the ones which are not divided, you get, because they just indicate a stop in price, but they don't show whether the price will continue or reverse, you get. So allow me stop here, but let me just give you a hint. In order to capture the way to easily understand how candlesticks behave, get the candlestick, how it's formed. Let me say the type will come third. So we start by saying what candlestick pattern is this? Complexity. Is it a simple pattern or a complex pattern? So is it made of one candlestick or it's made of two or more candlesticks? That's when you add in the type and be like, it is a simple bearish, or it's a simple continuation reversal pattern, or it's a simple continuation candlestick pattern, or it's a simple reversal pattern. You get, that's how we write them down. So guys, allow me stop here, and the next part of the video is for the mentorship. Guys, I'll be describing the different candlesticks formed in the candlestick patterns, the different like hammer, doji, all that, what they mean, gravestone. So guys, remember to subscribe to this video and also join the Telegram group where it's for free, and the link in the description. So guys, keep watching the videos, share, like, all that. Let's grow together in Forex. Have a nice day.